You ready?
Okay. Yep.
Okay. Hey guys, David Robinson here with the Apartment Investing Journey. Excited about our show today and our guest. This is someone that has a tremendous amount of experience in the real estate business and in the investing world. He has been in the business for about 17 years and has coached with Robert Kiyosaki for 5 years. 5 years he's coached thousands of individuals worldwide. He's actually the president of the Utah REIA here in Salt Lake and has a ton of experience as it relates to storage facilities, apartments, wholesaling, flips, being a real estate broker, and focusing on commercial and residential investing. So without further ado, Geoff Dearing, thanks for coming on. I appreciate you taking some time.
Oh, thanks for having me on. I'm excited to be here.
Yeah. Well, as we were talking about before we jumped on, the premise of our podcast is the journey. And I like to just sort of go back and help us understand how you got to where you're at today. So if you can, back up and tell us about your journey into the real estate world.
Well, yeah, I'll try to keep it brief. You can go a long ways back and go through a lot. But so yeah, growing up, my dad had done some stuff. He had a couple rental properties and talked about how he'd flipped a few homes when he was younger and wish he'd done more of it. And I had done a lot of reading in high school and on into college about different entrepreneurs and how they made their way in life. I read Dale Carnegie and a bunch of other, Robert Kiyosaki included, that you mentioned I did some coaching for. So coming into college, I had it pretty well in my mind that I wanted to do real estate in some sort. So when I first got married in 2002, we didn't start looking for apartments. We started looking for duplex, something that we could live in and rent part of and cover mortgage. It was house hacking before that term became popular. So
yeah.
But now it's basically called house hacking. So we bought our first duplex, and the rent from the basement made our monthly number less than half of what we would have paid for a similar space if we were renting. So not only that, we were building equity. So as we went through that process of buying that first property, I kind of decided that the realtor wasn't doing as much as I expected, maybe. So I decided I'd get my own license and search for the next ones myself. And we kept that property for 3 or 4 years and sold it and made some good profit off it and rolled it into some multifamily and some other things in Kansas City and just kept going. Kept buying houses to house hack. And by the time I turned 37, we had paid off our house, and that was about 3 years ago. So it's been a great journey. And we've like you mentioned in the bio, I've done wholesaling, short sales, several buy and holds that I still have today. Yeah, so apartments, storage. So
Great.
my main focus now being storage and apartments. So yeah,
That's great.
History.
Well, let's go back a little bit and let's talk about this process of getting your license and investing at the same time. Talk to me about what that was like for you. You were a little bit, I don't know, you didn't say frustrated, but I sense there was some frustration with the service that you got. And you've gotten into the real estate world as a broker, but you focused heavily on investment property, if I understand correct.
Correct, yes. So yeah, a little bit more about that process. I mean, I don't condone this course of action, but I ended up memorizing the realtor's login when we were working with her, so I could go in late at night and search for property myself. I don't recommend doing that because you're not supposed to, but I did. I was young and kind of foolhardy, only 21, so
yeah.
Too. But anyway, I ended up finding the property that we ended up buying myself. So
interesting.
She'd send us stuff and it wouldn't quite fit. So I went in there and put in my own parameters. And the first night first week I found the one we ended up buying. I got so excited I ran right over to the property and was looking around it at night, and the guy yelled at me from out of the window. He's like, "What are you doing?"
Oh, that's great.
And he ended up being a cop too. So,
Oh man.
anyway, so yeah, I've been pretty excited about real estate ever since. Again, that experience kind of drove me to get my license. I did it back when you were still doing videos and booklets. They didn't have online courses like they do now, so that shows my age a little bit. But it's definitely come a long way, and I've found properties for many other individuals, and including myself. But yeah, even to this day, I still look at emails daily for property.
And so that balance between brokering and investing yourself, over the years, have you found yourself doing, generating income and from more on the brokerage side or more on the investment side?
I mean, I like to think of it as multiple streams of income, as the book talks about. I believe it's a Robert Allen that wrote that book, but having multiple fonts adding to your pool. So I'd say originally it'd probably be more the brokering that I was making money, but now it's more my own deals. I still do brokering, and I still try to help people when they ask, but I don't do a lot of marketing or prospecting, so to speak. Mostly working with people that come to me wanting to get involved in something. I work with several of our members and other people, kind of helping them through the process of getting their first deal done. And it's rewarding that way to help people and make it a win-win all the way around. So
That's
kind
great.
of morphed from doing more brokering to doing more of my own deals.
Okay. And so would you say that at this point in time, what's your main focus at this point in time in your real estate investing and brokerage career? What does that look like?
So my primary focus for my personal investing is we're still doing flips and apartment acquisitions. But me personally, I focus more on searching for and acquiring storage facilities. We purchased one earlier this year. I have one that we started a few years ago, just kind of a beginning stage. We started it from land, built it up, and then I've kind of self-managed it with some help from some of my team, just to get it filled up to occupancy that we're comfortable with. And now I'm doing it with a new one. Like I mentioned, we acquired this virus things, kind of set it back a little bit, but we're still working on it. My goal this year is to purchase one or two more. So.
Okay, that's great. And where are you currently focused as far as your investments are concerned? You mentioned that you've done some investing outside of Utah. Are you focused here in Utah and elsewhere? What is it? Let me ask you that question. Where are you focused on right now, from geographically?
Well, we're focused on Utah primarily, but we'll also look at properties out of state if the numbers make sense. I mean, it's not hard to translate what you do in one to another one, even if it's out of state. So, it really just depends on the number. I mean, the other one that we acquired recently was out of state, so in Oklahoma City. So.
And have you found it challenging to find self-storage here in Utah? And is that the reason you went out of state, or was it? Go ahead.
Oh no, yeah. We are finding facilities in the state, but the numbers don't work quite as well. I mean, the cap rates here in Utah are actually pretty low, which is great for the seller, but not as great for the buyer. I mean, the same thing translates to multifamily. I mean, the number analysis is pretty much, the analysis is very similar, if not the same, using cap rates and rents versus, your expenses and net operating income coming to a cap rate and finding a purchase price that way. So yeah, that's been the primary reason that we've looked a little bit more out of state recently, is because of the market being so strong here. It's actually made it more of a seller's market than a buyer's market. So.
Okay, great. Well, let's thinking back over. I mean, you had a lot of years in the business. You've done a lot of deals yourself. Thinking back, what's the best deal or the deal that you've done that looking back was the most exciting for you?
That's that's a good question. I mentioned how excited I got with that first one. Well, that excitement I think has been repeated several times. I mean, the first apartment deal I did was with bought a was a 21 unit up in Brigham City, Utah, and it had a fire, so it was down to 16 units. So just going through that process of re-establishing, that property was about a 2-year process, but I made a multiple 6-figure gain off of it. So it was a trying experience, but also really exciting as far as learning and growth and focus. So
That's great.
I'd probably say that one was probably my first major foray into the commercial realm, and that taught me a lot. So that was a really exciting experience.
Cool. Well, let's I want to talk about two different specific properties. I want to talk about your self-storage facility in Oklahoma City. But I
Okay.
also, you mentioned briefly the wholesale. I think our listeners would appreciate maybe diving into the recent multifamily deal that you wholesaled and understanding a little bit about that process. You okay to go into that?
Absolutely. So it's been a little while ago, about a year ago. Um, my focus has shifted, but I mentioned that I work with a lot of our members who will bring me deals and wonder, hey, how can I capitalize on this the best? And we had a member that had connections to some property in Alabama, near the University of Alabama specifically, and it was a 48 unit that needed some help, value add as they use the term. So we started working on it, looking at it primarily initially to maybe purchase it ourselves, but as we got into it, the logistics were a little bit more complicated. It needed a new roof. Pretty much all the units needed to be rehabbed, and for this type of property to be your first deal, that would have been a little bit more than I wanted to take on myself and lead someone else through. You know what I mean? It's just kind of I would be relying more on myself than this particular individual. So we came up with the idea of potentially wholesaling it. So we put a marketing plan together, and we're able to put it under contract for a fair price. And during the due diligence, some even crazier things were discovered with sewer line and some other things. So we were able, with the help of the end buyer, we were able to negotiate it down another few $100,000 actually. So definitely do your inspections, because that can save you a lot of money. So the whole process took about 6 months, going from putting it under contract to wholesaling it to close. So, but all in all, it's not much different than wholesaling at home, just making sure that you have the time frame to do your investigations and verify all the numbers, because a lot of those properties, when they're mismanaged, you're going to have a hard time finding accurate numbers and diving in and making sure that you are really walking into what you think you're walking into, that you're not walking into a giant pit, you're sinking in quicksand. So
Right.
the numbers in those deals become very, very important. So
Do you remember, thinking back, how the individual that approached you about it, how did they source the deal? I mean, obviously they're a member of the Utah REIA. Here it is, a property, a 48 unit in Alabama.
right.
How did they end up finding the deal?
Well, like most of the good deals, it was found through his circle of influence. He actually had a family member on the ground there, and that family member had established a relationship with the owner of this property, and had actually come to his family member and said, hey, I've got this opportunity out here. I know that you're getting involved in real estate. What do you think? Is this something we can capitalize on? it went from there. So just by opening up his mouth, word of mouth, that he was able to generate a pretty profitable wholesale deal.
Yeah, that's great. Good for you guys.
Yeah.
Okay, so your passion right now is in or at least your focus is in the storage facilities. Let's talk about that a little bit. You recently acquired this storage facility in Oklahoma City, if I'm not mistaken.
Correct. Yeah.
283 units. Walk us through that. So we like to do a deal dig segment where we get a little bit deeper on a particular deal.
Sure.
If you don't mind, start off, just tell us a little bit about the asset itself and how you ended up finding the deal.
Okay. Well, just to reinforce, I am actually working as diligently trying to find apartment investments as well. I've got several people looking for me, and it's just my personal focus, my personal time is more geared towards acquisitions for myself in that realm, but certainly very active and aggressive in looking for apartments as well. But this particular property actually came through another local wholesaler, someone who specializes. They had a podcast nationwide that they get people inquiring to them and saying, hey, how can I get involved in this type of deal? And they'll bring them leads. And this was actually another local gentleman that had it under contract and then just couldn't perform. And similar to the apartment deal that I mentioned before, they decided, hey, since I'm not able to capitalize on this great deal, why don't I turn it over to someone else and make some money for my next deal? And they had it under contract for I think like $230,000, and they sold it us for $515,000. So by the time they made out with all the parties involved, it went through a couple assignments, but they walked away with 6 figures and did pretty well on it. So and we were totally fine with that. The asset after we bought it still has a huge upside. I mean, it was one of the original properties in the area, one of the first storage facilities in the area, so it's a little dilapidated. It had a new roof put on, but we're going in. I mean, we just installed an automated gate. We're working on we updated the security cameras to have more coverage. We're working on getting a bunch of new doors to put in the facility, and then doing things with the advertising that were never done before, including putting it online and getting its own website. So just doing those things alone have already turned it around quite a bit.
So let's talk briefly, and maybe you don't know all the details about this, but I know I can hear the listeners asking me to ask you questions about, all right.
Yeah, please do. I may not be going through it the way that you
no, this is great, but I can hear him saying, okay, wait a second. The original buyer contracted this at $230,000. It was
or something like that. I don't remember the exact number, but
roughly. Let's call it roughly.
And I think it went to another person at like 300 and something, and then it came to us.
And you still felt like it had enough room, even at 515.
Yeah, we think it's $1 million plus asset. I mean, 283 units once stabilized. We feel like we're walking into. I mean, doing the numbers at an 8 cap, which is pretty fair in that area. I think we were over $1 million in asset value once we're done, and we'll put maybe 50,000 into it to get it to that point over time, and it's basically paying for itself.
So I know what people are asking is like, all right, why would a seller who owns the asset be willing to let it go for roughly 230,000 if they're sitting on a $1 million plus park or facility that would only require about $50,000 in improvements? Help us to understand that.
Well, I think for them, it was more the fatigue. They had owned it since the inception. Their father built it and managed it, and they inherited it from him. And I think the 2 siblings that were running it just didn't want to be in that business. They had another business that was successful that they required a lot of their time, and they just decided that storage was not the business they wanted to be in. So fatigue is pretty common. I mean, you'll find investors that buy something thinking, hey, this is going to be great. I had an early mentor that I did some deals with that now has completely gotten out of real estate. They had some bad luck and some turns with the downfall, and they decided that real estate wasn't for them anymore. They just he went and he's now a coder for the state of Utah, more security, and runs a lot. So it's, you never know what someone's going to get into this thinking, hey, it's going to be a windfall, we'll make a lot of money and it's going to be real easy. I forget the quote exactly, but work is disguised in overalls and requires effort. And so when some of these people, I think, have bad experiences, they just want to forget and move on to the next
great
opportunity in their life. So yeah, I think it was just a matter of fatigue more than anything.
Okay. So if you don't mind, maybe just tell us a little bit about how you structured the deal. I mean, you bought it for $515. How'd you structure that deal? Was it a cash purchase? Did you debt, equity, finance?
Yeah, I wish it was more creative. I mean, but given the fact that, so it was initially sent out at 460, and then people just kept bidding it up because they could see the potential. And I finally said, just give me a number that I can take to my investors and let's make this deal happen. And fortunately, I had some established relationships with this particular wholesaler that I told him, look, I'm going to perform if you let me have this deal. So they finally gave me a number, and once that number was signed off on and solidified, they still were getting bids higher. And there was a couple bids that came in within the hour that were 5 figures higher than what I ended up getting it for. So nothing super creative. It was just the ability to pay cash and move quickly that secured this particular property, and having the investors to do so. So raising the capital beforehand a little bit.
Okay. And so it sounds like you got some partners involved, or at least some equity partners.
Yes.
Okay. And so you guys you pooled the capital together, you paid cash for it. And how long ago was this, roughly?
It's only been about 45, 50 days. So
okay.
We're still pretty early into it, but our plan is to, get it reestablished, get it back to where we feel it should be, and occupied, and refinancing it to pull out their cash so it can go find another asset to do something similar on again.
Yeah. And so the plan at this point in time, new gate, security, cameras, improving the marketing, thus improving the occupancy.
Right. Exactly.
Anything else in particular that you feel like needs to be done on it?
Well, again, the curb appeal, we've ordered a bunch of new doors. There was literally doors with holes in them still at the facility, and doors hanging off hinges. The previous manager had paid a guy or the previous owner had paid a guy to come in and clean out the units that were abandoned, and what he did is just come in and pick through what he wanted and left all the trash. So we're trying to get that all straightened out and get all those units.
And a lot of our listeners are familiar with how commercial real estate is valued, and you touched on this a little bit earlier in the conversation. But just to give our listeners some perspective, what is it about this deal? Like, what's the business plan? What are you trying to accomplish here?
Well, again, it's just to reposition an asset that has been poorly managed. I mean, the cash flow currently is about a third of what it could be, and the whole goal is, I mean, with any failing business, I mean, I know that, for example, Warren Buffett, this is something he does. He'll go in and buy a business that he feels has a lot of potential, and he'll turn it around and have it turn a profit. The same thing for any asset class in real estate, really. I mean, apartments or storage or retail, industrial, any of the commercial styles of investing, they're really the same animal once you get it down to the nuts and bolts. I mean, it's like comparing a tiger maybe to a house cat. I mean, the anatomy is basically the same. It's just a different size and a different overall structure. But
And so the whole goal here is to just really increase the occupancy and
Mhm.
manage it better and
Correct.
improving the NOI.
Exactly.
And by improving the NOI, that significantly adds value to this asset.
Yeah, the leverage class of commercial is what I really like. I mean, like with an apartment, if you have, for example, 50 units and you raise the rent by $50 a unit, you're dramatically increasing the value just because of the NOI going up. I mean, typically when you increase the rent on an asset, your expenses don't go up accordingly. You know, you're just building equity in an asset. So our goal is to not only take this asset that has been poorly managed to fill it up for better occupancy, but also establish, enough value for customers that we can eventually raise rents and even more value add to that. So I mean, the term value add focuses on many aspects of the deal, not only just the occupancy and the rent rates, but also the end value and your equity
Yeah.
position in the property. So there's, I think, 7 different ways to gain money in real estate between depreciation, appreciation, rent, tax benefits. All those things add up quickly, and it becomes a very lucrative deal if you know what you're doing.
That's great. Do you remember what the occupancy level was at, percentage was at when you acquired it, and what are you hoping to get it to?
It's under 40%, but it's still actually cash flowing for the expenses that we've. I mean, they didn't have power on, they didn't have, and then yeah, they didn't have a website, they didn't have the manager who we still have in place. She's been there for 11 years and still was manually entering accounting into ledgers, like physical
Wow.
ledgers. So, it was kind of archaic feeling, like, things that we thought were gone away with, 20, 30 years ago still happen on some of these properties. So just seeing that transition has been huge, getting all of our clientele into a database that we can look them up in about 10 seconds versus 10 minutes trying to find someone's information.
On a paper in a file cabinet.
Exactly. Yeah, on a ledger somewhere. Oh yeah, their balances. Oh, let me add these 10 lines and then they'll tell me, where now it's just click and there's their balance. So technology definitely helps a lot, not only in finding these deals but managing even from afar.
So you bought it at roughly 40% occupancy. What do you think you can get it to?
Our goal is to have it above 90% within a year. So I
Wow.
mean, there are other facilities. There's one not too far away that's brand new, and all the other facilities in the area are actually above 90%. And there's definitely demand. It's a growing area, and indicative of that is the fact that they're building a new one or have built a new one nearby. So, just by increasing the exposure and helping people find it, we're not mass marketing right now because we're still in that process of getting the curb appeal up. But once that's done, then we'll spend a lot more time and money in advertising to try to get that filled up. So,
And then your intention is to refinance and
correct.
pull out the initial investment, or at least as much as you can,
Yeah, the
and then
initial
hold long
investment,
term.
or at least the majority of it, if not all or more, so we can go rinse and repeat. I mean, um, if we can stick to geographical areas, it makes it easier because once you establish a team, you have that team to call on. But I mean, if I found the same deal tomorrow in Indiana, for example, I'd certainly pounce on it because
Yeah.
the numbers make sense. So,
And speaking of team, were the other partners or investors that were involved here in Utah, or was anybody boots on the ground in Alabama?
it Oklahoma.
Oh, that's right. I'm sorry.
No, you're fine. Alabama was the other one,
That
but
was the
yeah,
value add deal,
and
or the
yeah. So fortunately, well, funny enough, I didn't know anybody, but with our national network, I was able to reach out to some people to get some suppliers and some other things set up before I purchased it. I mean, I had maybe a 24-hour window to make it all happen. So I was I was on the phone that whole day just calling. I eventually just started calling businesses right around the facility just to get someone over there to take photos. And a gentleman that had his office next door was nice enough to go take some photos for us to give us an idea of what we were walking into. I mean, they only had like one photo. They didn't have any, they had a very rough idea of what the numbers were. I mean, after I purchased it, I found out there was a manager that wanted to stay. So that was a big relief, because I was like, who am I going to find to manage this thing, or at least open the gate night and day until we get the automated gate set up. Because I mean, they were manually opening and closing the gate every day, except Sunday when they were closed. So, you know, just being able to find that out would have been helpful up front. But, you know, sometimes these deals are just so helter-skelter. You just got to go with the flow and make it happen the best you can. So
yeah, well, it sounds like a killer deal. Yeah, you just need to duplicate that a few different times, right?
Yeah, I mean, that's the hope. I've got a couple. I'm gonna start underwriting on one here in Utah today, and you know, we're always looking.
Good
They're
for
not
you.
all gonna be that great, but you know, if you get embedded with the right people, you can definitely find these deals.
Yeah, good for you. Well, I want to start winding down here a little bit.
Sure.
I want to ask you sort of our final three questions before we let you go. You've got a tremendous amount of experience and a great story. What's the biggest challenge that you've faced in your real estate investing journey?
For me, honestly, it took a while for me to clearly define this, but it was focus. I like variety. I like new experiences. You know, I love to travel, which is contradictory for a natural introvert, I guess. But for me, it was just the focus. Starting out, you know, I'm like, I want to do a flip, or I want to do a short sale, or I want to buy some some cash flowing investments. I want to do storage. I want to do, you know, industrial. I want. So I had all these things, you know, apartments. I wanted to do everything. And as they say, the practitioner of many is a master of none. Some to that effect. Again, butchering the actual
Sounded good to me.
idiom, but the real focus, you know, once I really focused, I was able to accomplish much more. I mean, we started our first facility. It took 4 or 5 years to go through the process. And that was part of the problem, is I wasn't focused. We had this piece of ground. You know, I looked at self-storage was the last thing, but before that I looked at industrial condos, I looked at senior living, I looked at assisted living, and I looked at all these different things, apartments. And, you know, at the end of the day, the best use for this particular piece of land ended up being storage units. So, you know, I did a lot of research, did a lot of learning, investigating, and I'm still learning, obviously, to this day, and will continue to learn. But so that was my biggest challenge, was just focusing on something enough to let it come to fruition. You know, I feel like with wholesaling, I was doing that with a partner, and we'd get the wheel rolling a little bit, and then we'd hit a roadblock, and then things would stop, and we just never. I feel like it's mostly my fault, because I didn't feel like I put enough focus into it to let it take off and become its own company. The same thing with apartments. I mean, I was doing it myself, thinking, oh, I can do this all myself, and I never put the team in place. So now that I've been putting a team in place and focusing, you know, things are really starting to fall into place.
And would you say that focus is now pretty well dialed in to the storage facilities?
Yeah, to storage and to apartments. I mean, we all have our specialties, you know, with the connections I have through the REIA and other sources. You know, I can really generate the investments, that capital funds that need, you know, fundraising is an advantage I have. So, you know, I'm working with people that want to find deals, and I know how to do a quick analysis to see if it's something that we want to pursue deeper to look at. So
yeah,
you know, we are looking at finding apartments as well. But again, for me, for my personal business and my personal focus, yes, it's in storage.
gotcha. That's great. And the next question I got for you is, what's the biggest win you've had on your investing journey so far?
Well, I think that apartment I mentioned in Brigham City was a really, really big one. Again, it was 2 years of a lot of sleepless nights and heart palpitations and a lot of, I mean, we had an order from the city to knock down the fire damaged part of the facility, and we couldn't find anybody to do it for a reasonable price. So I was up there doing it myself
Oh, wow.
with a friend, and they got mad at me and said, "You can't do this. You don't have a permit." I'm like, "Well, I didn't know that." I mean, just going through that process, learning, getting permits, how to do the process correctly. It's helped me with these current deals that I'm doing. And then I think being able to find one of the properties that I own now, I was able to find here in Utah for $50,000, and it currently brings in about $2,100 a month in rent. So, I was able to pay cash for that one. I just kind of left it. I put some money into it and updated it and done some things, but
Yeah, that's a great win right there.
that was a good win for me as well. Those are probably my top two.
That's great. Well, and then the last question I got for you is, what's the best advice that you have for someone who's just starting their real estate investing journey?
Again, going back to that focus, I mean, find something that, even if it's remotely interesting, let that candle burn into a flame. I mean, let that spark turn into an actual flame, and give it time to come to fruition. I mean, that's, I think, the biggest hurdle I see with new members of our organization with the Utah REIA coming in. They look at something, they see the wide variety of things that they can do in the industry, and most of them gravitate to like flips or wholesaling. Don't be hesitant to do something, and then let that seed flourish. Give it the time. Don't just get, sorry, mind fart here.
No, you're fine.
Don't just give up when the first sign of trouble hits. I mean, real estate is a numbers game. It's difficult. Things don't always go the way you plan the first deal. I mean, some people hit the ground running and they're able to make their money really quick, and then they run into problems later. But the long and short of it is, everybody runs into problems. A true real estate investor is someone who becomes a creative problem solver expert. So, use your resources, get to know people, and just pick on one thing and run with it for at least a year. I mean, let it become your whole life if you can.
Yeah, give it some time to actually play out.
Exactly.
That's great. Well, Geoff, this has been a pleasure to have an opportunity to chat with you. What are the best ways for people to connect with you if they want to learn more about what you have going on, talk to you about any deals? What's the best way for people to connect with you or learn about Utah REIA as well?
Well, our website, Utah REIA, utahreia.org, is a great resource. We have a bunch of videos on the back end for our members. We record literally every meeting, well, regardless, unless the presenter asks us not to, which has only happened once. So all of our meetings are recorded and available for our membership on the back end. It's really cheap. It's only $99 a year to start, and the high end, it's only $200 a year, and there's a myriad of benefits that take a long time to go into, but the least of which, or being that you get education and networking, can meet a lot of, most of the heavy hitters are members of the different REIAs around our organization included. So that would be the first way. The second way is my phone number. Send me a text, call me. I don't necessarily answer if I don't recognize, but if you leave a message, I'll call you back. And that number is 801-232-9500, 801-232-9500. And then my email is also really good. I usually can respond a little quicker. gwdearing, DEARING @yahoo.com. And I don't know if you'll put that up on the screen or whatever, but those are the two best ways to reach me. I'm pretty reachable. I mean, I'm on Facebook. A lot of people message me there. pretty easy to find there. My name's a little different, spelled with a G. It's Geoff, Geoff. So if you type in Geoff Dearing, you should find me. So
Great.
not a hard guy to get a hold of if someone wants to.
Well, Geoff, pleasure chatting with you about your journey and your personal experience. Thanks for taking some time to dive into, this wholesale deal that you did in Alabama, as well as the storage facility in Oklahoma City. That looks like an incredible deal. And maybe we'll have you come on again in the future once it's gone full circle and you can tell us how it played out.
Yeah,
But,
give us another year.
Yeah.
And then we'll be there. But yeah,
Well,
thank you for your time and allowing me to come on and share some of my experience. And I'm always down to help people with their first deals, or even help them with deals that they're struggling with or need a partner on or need money or whatever.
Great.
Hit me up. Let's make it happen.
Well, we'll have your contact info in the show notes. Geoff, thanks again for coming on, and look forward to connecting with you again soon.
Yeah, thank you.